Welcome. The trading masterclass you're about to watch is one of the keys to my system of taking money out of the stock market. Talking yourself through the reasons to buy a stock helps you see things in your analysis. Talking yourself through stocks in hindsight helps you justify why you made the decisions that you made. This is a big part of my trading. I hope you enjoy it. Okay, so here we go. This is our stock market trading class. And listen, I'm going to take you on an inside tour of what I do to analyze a stock. I'm only going to have time to analyze a couple of stocks in this class, but you're going to see how in-depth I go on the analysis. And yes, this is a post-analysis, and it is of stocks that we've actually partaken in and have made money in. So you'll see how we made those decisions and why we made those decisions. But first, let me set all of that up. So just to talk about our system is based on a comprehensive set of rules. And like any good system, there's a formula to it. And the system consists of fundamental analysis, technical analysis, risk management, and then probably the most important thing is your psychology. Because if you've ever traded before, you know that it's tough to lose money. But that's a part of the game. So if you're going to be in this game, you have to understand that psychology is a big part of it. So that is what makes up our system. In this particular video, we're going to assume that we've already done the analysis on the fundamental side. And since we've done that analysis, we don't need to belabor the point of what's going on in the analysis. We can just jump right in and look at the technical side of the analysis. And then, of course, we're not going to be able to get into our risk management philosophies and our psychology here, although I'll kind of skim around some of the psychology as we talk about it. But the idea here is that you could start to see patterns. See, the more charts you look at, the more patterns start to jump out at your eye. So basically, our system is based on 120 years of research. Now, we didn't do all the research ourselves. We've essentially piggybacked off the giants that came before us. Giants like William O'Neill, and then we've studied traders like Darvis, who did the box theory, and then Jesse Livermore, as well as some of the great results from William O'Neill and some of the other people that have been in the market. Our goal is not to just be average. If we were just average, we'd put our money into an S&P 500 ETF, and we'd hope for our 9% or whatever per year return. But that takes into account there's a bunch of stocks that are crappy in this S&P 500, and there's a bunch of stocks that do well. So you end up getting an average return. If you want to get an average return, this is probably not a system for you. If you want to get an above average or a triple, quadruple, the rates of the S&P 500, that's what we strive to do in our hedge fund, and we do it quite often. So jumping right in, Vivid Dreams is our proprietary system. We use it every single day in our hedge fund. And it goes over a lot of these things, and we look for certain indicators to make sure that we're setting up not only fundamentally but technically in a stock. You can look at these or take one of our courses that goes through Vivid Dreams. It's quite a great system. It's like the Can Slim system that Investors Business Daily uses, but it is a little bit more comprehensive in that we've taken the Can Slim and have improved it. At least we think so. So what are some other questions? Do we like management? How is the industry performing? What's the sector of the stock? How is it performing? How's the market overall performing? Is the stock a leader? And when are earnings going to be reported? Pretty important to know all of these things before and during a stock trading experience. So here are some technical analysis that we use. One of them is a cup and handle. Cup and handle, you can see the cup there, the silhouette of the cup, and then a small handle. It's a pretty popular and reliable indicator of a stock's breakout pattern. Double bottoms, we love those. Those are good shakeout patterns. A consolidation pattern is just where there's an upper range and a lower range, and the stock trades within that until it has a breakout, either the upside or the downside, depending on what we're looking for. Some of the moving averages you'll see on the charts are the 50-day moving average, or on the weekly chart, it's called the 10-week moving average, roughly the same thing. The 200-day on the daily, or the 40-week moving average on the weekly. And then some other charts you'll see on there, 10-day moving average, a 21-day moving average, and on a lot of charts you'll see the 100-day moving average. We don't use that one too much. More the 50 and the 200 are our primary indicators. Some other things we like to identify are the pivot point, and if you're going short or long, that's why it's called the entry point, because the pivot point means you can go short or long depending on what your entry spot is. Watch for closes in the high end of the range. If a stock opens and then goes all the way down and comes up back to its high end of the range, that's usually a buying signal. or at least a good indicator that there's some buying going on in the stock. We look for golden crosses, the 50-day going across the 200-day moving average. Death cross is the 50-day coming down through the 200-day moving average toward the downside. And then the change of character in the stock. If all of a sudden the stock has big gaps up, big wide price spread and accumulated volume, those are changes of character in the stock's trading, and those tell us something as well. Now we're going to take you through how we analyze a stock when it comes to technical analysis and how we look at the chart. Assuming you have a company that has all of the characteristics of the prior winners from the last 120 years, now we start to plot the things on the chart that we want to see so that we can start to get involved in the stock, because that gives us psychological reasons to stay in it. So this is Facebook. We start on a weekly because the weekly takes away the noise. We then move to a daily. So let's start on a weekly. Let's go back to 2016. We have the benefit of hindsight, but we did make significant gains in this stock over the last several years, mostly in 16 and 17. And you'll see why as we kind of analyze it. Now, we didn't get involved. Actually, I bought some at the IPO. So I got to get some of this downdraft, and I got out a little bit early. I think I got out probably right in this point here. It was not fun to be in this stock where it came out at 34 and went down to 17. And notice the personality is shifting, and you can see it on the chart. That's what the charts do, is they show you. This is a weekly chart, so this is a long period of time, where if you bought it here, you had to sit there for a long period of time before you got your money back. And that's what a lot of people didn't like about Facebook. But by the way, this was the period of time where Facebook was shifting from a desktop application to a mobile application. And that was the big thing about them. As soon as they shifted to the mobile application right in here, that's where the stock really started to take off. You could see the numbers and the trends. Now, we didn't get involved. We got out. We were happy to get out. We got back in and made a little bit here. But we didn't get involved in this as a long-term trade until the stock was around $69, if I remember right. And let me show you what I was looking at back then. We saw a cup with a handle, and if you don't know what a cup and handle is, watch our cup and handle video. But that stock has made a cup right in here. You could see it, and then there's a little handle there. And so this top of this cup right there is the spot where it wants to break out. And so let's actually give you a number. The high is 68, so the breakout point for us is 68.10. And look at this healthy bounce off the 50-day moving average, or the 10-week moving average. So it bounced right there. You can see it. And that's what we want to see. So all these things were setting up right. We were watching this stock. We wanted to get involved, but we couldn't. We couldn't chase it. It wasn't at a buy point for us. And then it corrected here. So it was under the 50-day or the 10-week moving average for quite a while. It broke back through the 10-week moving average, making a cup. And now we're looking to get involved. So we started to start our position here around $68, $69. But now we had healthy blue bars trading at the top of their range. You'll hear me say that as I analyze good stocks. That means that the big money wants to get involved. And that stock broke through. Look at this beautiful bar here. Broke through the previous all-time high and now created a new all-time high on volume. Had a small correction, but you can see how many weeks in a row after that little correction. What, 10 weeks in a row, 8 weeks, 9? That the stock kept going up. And it's now starting to have a little bit of volatility contraction where it's not moving a lot. We like to see that. And we like to see a little bit less volume as it's moving higher that are not at the significant points. Now notice, not a lot happened here, but it just trickled up, had its little corrections below the 50, which scared us. So we took a little off the table. We added back in. The stock started to prove itself. But notice the volatility has gotten a lot. Look at this volatility. And now look at this volatility. It's a lot less. The movements on the weekly basis, top to bottom, are so much less here than they were even just 3 or 4 months ago. And so now we're still at a profit, all from this point, not even threatened to take away any of our profits. You could see it's under the 50, which doesn't thrill us, but it's under it on very low volume, and now it has a bounce from the 40-week moving average. So if I say 50, I mean 50-day, but that's also the 10-week moving average. That's the red line. The 200-day is the black line, or the 40-week moving average. And that's generally the kind of a line in the sand. When you get bust through the 40-week moving average, it's time to move on. Okay, so notice we're still not even threatening our, I'm going to draw a line there for us so we can see it, our breakout point. See that spot right there? It's never threatened that. It just keeps moving higher. We like that. When a stock goes green immediately, we can start adding to our position. We really like that. And so it just keeps going up. It's not threatening that we're going to turn our profit into a loss, which is a violation of one of our rules. And has a little slight shallow cup or consolidation right in here. You could see it in this area right in here. And then another breakout on decent volume. See the breakout on the volume there? That's a good sign. And now we had a breakout, but boy, right after this, we couldn't see it coming, but we had a big breakdown. That stock traded all the way down and scared the heck out of people at around the $72 area. Now, if you hadn't gotten in at this point, and you had gotten in at this point, you would have been shaken out if you follow the 40-week moving average as a spot to start taking your profits. Recovered fairly quickly, and it recovered on good volume. It never closed below that. So we could look at that certainly in hindsight and say, yeah, we would have sat through that. Well, you probably wouldn't have, because that was a pretty scary week. But it did close higher, and if you hadn't given up on the stock at that point, you'd still be in it. We were still in it, and we were looking for add points here. So this was a good sign for us, but it wasn't a great sign until we got to this sign here, and it went back above the 50-day. And it closed above the 50-day. And so we started to look for a spot to add, and we added here at this pocket pivot, somewhere in here. I can't remember exactly when, but I know we sat through this one, and we were really scared. I just remember that. And we added a little bit more. We added a second position, essentially, is what we did. And now the stock finally ended up going to 110. Now remember, we got into the stock around $68, $69, and we got majority of our position at that spot, but we added here as well. And now the stock is going to make another correction. It's taken a run at that 40-week moving average. Again, closed above it, and then bounced really high on good volume back above the 50-day. So we stayed involved in this stock. I'm just going to jump ahead a few weeks here for you so you can see that we were always looking for spots to buy the stock because there weren't a lot of spots for us that we should sell. Notice how every time it goes down to that 40-week moving average, it bounces right back off of it. And it doesn't spend a lot of time below the 50-day, below the 10-week. And so that's just keeps telling us that there's reasons to buy it. So we didn't buy it all at once. We bought a little at a time. And we bought it at add points. So like right in here, there's like 5 weeks in a row where there's a tight pattern. Volatility is really low, volume's low. That means that the market makers and the big money institutions are not letting that stock drop. So that's an add point. Anytime it touches these 10-week moving average and closes higher on decent volume, that's an add point for us. So we just kept trying to add to the stock. As long as we're not chasing it, as long as we're having a plan and adding to it, that's what we wanted. And this stock kept exhibiting things that showed us that we wanted to be involved. Now it's not. Notice this. Now it's starting to trade under this area. And so we started to lighten up a lot on our positions. Remember, you can always get back in. And so we remembered that. But now notice the 50-day or the 10-week red line is coming down through the 40-week black line. So now notice another consolidation pattern, but it's at a lower level. So see this level here? That's at a lower level. We still got involved in this stock somewhere right in there. So we're okay, and we got out of most of that stock around here. But now we're still looking for a pattern to get back in. But we don't like this death cross. We don't like the red line moving down through the other one. But now it's moved back up, and now you're seeing a golden cross starting to shape up and a cup and handle. See that cup and handle forming in here? Not much of a handle. The handle's right there. Hard to see. It's right there. And then it had a little bit of a personality change, but now that stock is starting to move back up. So we started to get back involved in that on a lesser basis. And notice the volatility is now decreased again, and the volume is also decreased. And now that stock just keeps going up. Now, what's our plan? Our plan, since we're in a later stage base, or kind of a mid-stage base, I think we were still in a second stage base, was to start getting out around 160. I think we did. I think we got out of most of our stock around the 160 level. We gave up some profits. We missed out on that 180 area, and the stock eventually ended up going way above 200. We're not unproud of that. That stock went from 68 to about 160. It almost tripled, and it if you look back on it, it was a really easy stock to stay involved in. Let's take a look at the weekly chart on Microsoft. This is an overall view. You can see it going from lower left to upper right. Pretty simple, right? And again, we use a lot of technical analysis to get into a stock because it's like getting married. You know, you'd rather have it be really hard to get into because you've really done your due diligence than just quickly getting in and then realizing that you're wrong. So if we're going to be getting married to a stock, even if it's just for a short period of time, we want to make sure that we're making a pretty darn good decision. And so we've screened it for fundamentals, and now we turn to the technicals and look at it. And so let's just look at it lately. Let's look at this upper right part of the chart. You can see, well, the market's been in a correction here. And so the stock is also mirroring that correction and is setting up kind of a double bottom. It's not that evident on this chart, but there's a double bottom there, which you'll see when I show you the daily. We don't like the fact that the 50-day moving average, or in this case, the 10-week moving average, is moving down through the 40-week moving average. We don't like that, but it is starting to show some support here around the 40-week moving average. So that's another piece of information we want to know. Let's see if it recovers. Sure enough, it's trying to recover that, and we don't want to definitely buy it when it's under that. We're not value buyers. We don't try to buy things on sale. We don't know if they're going to keep going down or if they're going to be able to stay up. But now we get 2 bars above that 40-week moving average. That's significant. And so we're seeing a double bottom set up here, and it's not really the exact pattern that we want, but this price here is setting up. There's a it's hard to see, but there's a cup and handle showing up in here, and the top of this bar is your top of the handle. It's 107.90, and you're seeing this bar at the edge of the chart now trying to break through. It's at 108.30. And so it's doing a lot of things right. The only thing I don't love about this is that the 10-week is below the 40-week. And in a really healthy environment, if you look back here, you'll see the 10-week has been over the 40-week for most of this run. And this run is going from September 16th practically to the beginning of 19. So it's at least a 2-year run. They last a long time when things start that way. Nonetheless, that's the only flaw here that you see. And you don't see a lot of volume at that 108, which we've established as our breakout point. So that's that spot right about there. And you can see it's just peaking above, but it's not doing it on very big, convincing volume. So we're not that convinced yet, but nonetheless, we want to get involved in the stock at 108 because that's what we've been setting up for. And as long as it starts to act a little bit better, and sure enough it is, the only thing now we don't like, well, there's 2 things, is it's below, the 10-week is below the 40, and it's not moving up on significant volume. However, if you look at all of these blue bars compared to the few red bars that there are in the last, say, 10 weeks, I think it's 8 out of 10 weeks are moving up. That's significantly good. That means the big money is starting to buy. The market is also moving up and has been since the beginning of the year, so we're following that trend as well, and that does help. In fact, 70% of all stocks go in the same direction of the market, especially when you add in their sector. So now we're looking at the beginning of March here. Notice how these blue bars keep getting painted, and notice how a lot of the range for the week is at the upper edge of the week. So at the end of the week, this thing traded up. At the end of the week before, it traded up. Before it traded up. So it's, people don't want to miss out on this run, and so they're continuing to get involved in this stock. Now we notice that there's a little bit of a resistance spot there that we're going to have to deal with, and we'll show you that on the daily if I can get to the daily. Now it breaks through that resistance, and then once it does that, it's now really looking at those all-time highs to break through, and it's starting to do that. It started to do it in a pretty good volume. So this is less of a noisy chart. As we just scroll forward and see what this stock is doing, it wants to go higher. Look at all the blue bars, they're getting painted, and at this point it's too late to get involved because really your buy zone was really from about 108 to about 113. You don't want to chase a stock and get involved too high. You want to add a little bit as it's going higher, but within that 5% buy zone is where you want to contain your buys. And you don't want to buy too much in there, but you want to average up slowly. And so we got fully involved in this by 116. It had numbers here in the middle of, well, I guess it was the end of April, and it peaked there, and that was our target. Our target was 129 to 130 on this stock, and it doesn't look like much is going on in the way of selling here. So we're still pretty excited about this company, even though we've sold off the majority of our position. We are looking to get back involved. So let's analyze Microsoft on a daily basis. Now we're looking at this in 2019, and we've just come off a pretty lousy year in the market. But if you look at that lousy year, you see there's an uptrend in Microsoft. So even though there's a lousy year, you still see an overall uptrend. It's easy for the naked eye to see. So we like that. We also like the fact that the 50-day, the red line, is over the 200-day, which is this black line here. And 50-day being over the 200 shows that it's in an uptrend as well. Then third, the stock itself is over the 50-day moving average. We like that. That's usually healthy. In fact, most of that move above or from the left to upper right has been above that 50-day moving average. Sure, it's had some corrections and into the 50-day moving average, especially when the market corrected, but then it's also bounced back and it's traded above it. Then you see here where it got to 116.18 there. That was a swing high, and that happened back in October last year, 2018, when things were peaking, and then we had a big correction that happened. And notice how the personality of Microsoft changed in that correction. And it's easier to see the noise here in that personality change on the daily than it is the weekly. But look at it. It's fallen now below the 50-day moving average. On a day-by-day, the volume is increasing. And if you look at that volume, you see it's pretty high. It did bounce off the 200-day moving average, but it couldn't hold the 50 for a lot of this period of time. It set up a double bottom here. And it is a valid double bottom because the second V of the double bottom is lower than the first V. This 99 is lower than that 100. And so that sets up a significant double bottom. I just don't like when double bottoms set up underneath the 50-day moving average. So to me, it looks like there's some fault in that double bottom pattern. And sure enough, when it reached that pivot high of 112.34, which is this spot right here, the high of the W, the middle of the W, it tried to break out to 132 and then had a failure. And so that failure happened, and look at the failure, again, back below the 50, and then boom, back below the 200. Very unhealthy. This period of time in Microsoft is ugly, ugly. We don't want to be in that stock. So if you happen to buy that double bottom, which is a valid pattern, again, not a pattern that I love because it's most of that action is taking place below the 50, but if you bought it, you better have gotten out soon or quickly, because this is what ended up happening. You would have had to hold that stock for 20 points from 113 down to 42, and that's way more than the 7% we like to handle as our risk tolerance. So you can see that it started to build cause to go higher. And again, the market started to move higher here at the end of December into early January. And as it built that, all this congestion happened here. All this congestion happened here, and it started to do it on fairly low volume. Sure, you had one high volume red bar for one day, but you had an offsetting blue bar or green bar on the other day, and the rest of them were all below the 50-day moving average volume. And so this is just a bunch of congestion, getting rid of all these people that wanted to take profits, accommodating all of these people that want to get out from up here, and really just changing hands and getting some new ownership in this situation. You'll notice a cup and handle pattern has been collecting here. So let me just move forward here a day, and we'll see what's going on. Now you'll look at this. There's that double bottom that I just pointed out, and then from this point you'll see a cup and a handle. So the cup kind of comes down like this. It's hard to draw a cup with these straight lines. It continues up here. It creates a top of the handle, and then you have a pretty decent handle that corrected on lower volume. So you can see the cup here straighten, showing itself, and then making a nice little handle. And the handle's pretty shallow, which is good, and it's shallow on low volume, setting up a pivot point to be at 107.90 and setting up a pocket pivot right in this area. And so a couple of things are starting to emerge here. First of all, you got a great stock. You got the market going in the right direction. And then you have this breakout bar here right at the edge of the chart on growing volume from the day before. And it's a pretty solid breakout bar. You can see that it closed here on the high of the day. Closed right at the high of the day. That's a healthy sign, especially on a breakout. That means the big institutions are starting to think about getting involved in this because they don't want to miss out on this pivot. And so that pivot starts to set up a buy point for you. As we move forward in this chart, notice what happens. You had a gap up. Healthy. Now you don't want to miss this too much. Hopefully you bought some on this breakout day, even though it wasn't a huge volume breakout day, but you just might have bought a little bit. We bought a little bit, and we started to add to it as it started to prove us right. And so as we went forward with this, we started to realize this could be the breakout. We realized 113.42 was a spot of resistance, and 116.18 was an all-time high. So we had two spots that we had to get through. And we knew that that was going to set up to be some resistance. So we essentially had about a 108 pivot point up to about a 113. We call it a buy zone because in that period of time, it's going to prove itself for a consolidation. And sure enough, it was closing at the highs every day. Then it started to close kind of in the middle of the highs. And then as we move forward, you'll see, even though it corrected, it still closed at the high. And so we're accumulating a little bit at a time all during this period of time. Notice how it consolidates here. Notice how it comes back down to the 200, or that's that 10-week moving line. And it keeps staying above that 10-week moving line. Stays above it. Now this is showing healthy signs of a consolidation pattern of the accumulation. And then here is where we had a break in it. We had a break below the 10, down to the 21. Not that we use those as main factors, but they're starting to tell us something. But you know what? Look at the volume. Pretty minimal. And as we analyze the stock now, this can be tedious for you, but you know what? It's worth it. We saw that it was going down on low volume, which says, hey, there's not a lot of sellers. And that selling zone is setting up for 113.42 anyway. It's also a breakout zone. So we can look at that previous high as a breakout zone again, and we've been accumulating enough that boom, now it hits that breakout high and basically mirrors that high. Now what's it going to do? It's going to break through it, and look at the volume. On this day, you should have been adding more. Not a lot more, because hopefully you've been buying since 108. But if you had added more on this day at 113, that breakout day on high volume above the 50, that's not going to kill you. You're averaging up, not down. So hopefully you don't average more than, say, 20%. We did that. We just kept buying in here. And notice how the stock wants to go higher. There's a lot of blue bars getting painted, a lot of buying. And now it goes up to that 116.18 resistance spot. It tries to break through it on huge volume, and it can't do it. That's okay. You could be buying, but now we're a little bit extended, 8 points above our buy zone. That's a little bit farther than we want to be. We like to be about 5% within that $108 buy zone. And so that gives us basically about a $5 area where we can be buying, which was perfect for us. Now, as we keep going through March here, you're going to see spots where you can continue to evaluate your adding positions. Notice the blue bars. And now you'll notice there's a couple of spots where we started to take some profits. Right in the 120s, we took some profits because we got scared. We didn't want to give up our profit. Now, this was a mistake, but we did it anyway. And we took some of our profit off the table, and look at what happened there. The next day it corrected, and it did it on pretty low volume. It's still above the 50-day moving average, but it's fairly low compared to what's going on now. You're starting to see a lot of these average and above average volume days. Now notice on this bar, it's at the high again. What's that telling us? It's telling us that people want to accumulate there at the end of the day. And as we continue to go forward, we started to see that there was another accumulation zone here, another consolidation. So we added more to our position. Basically, we set up a new position at this spot. We took some of our profits, and now we started to build back up to where we were, and we started to add back in because we had already pocketed some profits. And now as each day goes by, you're starting to see this little mini cup setting up. Now it's a little mini cup and handle. It's not a valid pattern because it's not long enough, but it's telling you there's a pattern setting up there again. And now we've got numbers coming up. You have to be cognizant of that, and the stock wants to run up into numbers. Now the 120.82 swing is a resistance point. And we know that, look at that, when it gets near that 120.82, it wants to break higher, and it's doing so on lower volume. That's not telling us a lot either. But we can accumulate it here because look at all the blue bars. And the blue bars are telling us that the big money is accumulating going into numbers. There's a bounce off that 10-day moving average, and then another close at its high. And then another breakout, big volume, certainly bigger than the day before and higher than the 50-day. And now that stock is kind of off and running. And so if you haven't gotten involved now from the 108, it's way too late. You're now up, basically 16 points from that 108, and you've missed a lot of this run, because this stock wants to go from 108 to about 130, which is about a 20% increase, and that's where most people start to take their profits. But look at closing at its high, closing at its high, closing at its high, 3 days in a row, 4 days in a row, blue bars. This is a sign of some serious accumulation. And we were still accumulating less and less as we were going higher, but we couldn't keep accumulating going into numbers. We did have a cushion, but we certainly didn't want to give it up. Now remember, we pocketed some profits, so we felt pretty good about our position. Look at this gap up that we had. And this, I think, was the numbers day. And at that point, that was our target zone. Our goal was to get out of this between 129 and 130. And when the stock after hours was trading up, I think it was 135. That was a serious sign of strength. I think it opened at 132, and then pre-market was 133. But it basically sold off on that day. It gapped up and sold off the rest of that day. Now, it wasn't an unhealthy pattern, but it was a pattern that should give you cause. Now look, the selling didn't continue the next day, but we sold off most of our position in here because that was our target. Our target was to go from 108, go up 20%, which gave us just about 130. And certainly these were opportunities for us to take profit, and that's what we did. We still kept some. And boy, after seeing this bar, I wish we hadn't, but we still kept some because the stock, we believe, is a healthy stock. And we've pocketed a ton of profit by now, but now look at all the selling. That's all these people wanting to fill that gap. That gaps get filled, and so all these people are selling. But now it's a healthy bounce off the 10. Now it's trying to hold that 10, but it can't because the market's starting to sell off at the same time a little bit. And so you're seeing the stock go back down into the mid 120s. Fortunately, we had a plan before we got into it to start at 108 and trade out at 129 to 130. Now, we still have some, and we're looking now, here it is, the end of May, and we're still looking for spots to buy back in. Unfortunately, the market is in a correction, and so we can't buy back in, but look at a strong day showing us that the market makers are not walking away from this stock. Notice how it's starting to form a cup. It's starting to try to be healthy. It's starting to consolidate. And we are looking, this is an early stage base for us. We have the 200-day being crossed by the 50 here, and it's off to the races, just like it was way back at the beginning of this chart. These crosses, these golden crosses, tend to go for a long period of time. So that's how we analyze Microsoft. It might be tedious, it might be extensive, but the bottom line is you want to look at it on a day-by-day basis after you've looked at it on a week-by-week basis, because now you're getting a feel for what that stock is doing. If you own too many stocks, it's not going to help you because you're not going to be able to remember all of the swing points and all of the data that is going on. This took us 15 minutes just to explain it, and we already knew the stock. So we don't know where this is going to go. We suspect, this breakout of 108 back in here, going up to 130. We expect it's probably going to go to 170, certainly, and that's another base area where we think it can consolidate. But this stock is certainly a good long-term play. But again, we don't look at it as a long-term play. We look at it on a day-to-day, week-to-week basis, and if it tells us to get out, that's what we do. So I hope you got some value out of that trading masterclass. You should be analyzing stocks like this every single day. It'll help you cut down on your mistakes. Listen, if you're as tired as I was of screwing up your trading, I want to help you. I've developed a cool trading course that's going to take you through understanding patterns like the cup and handle, the double bottom, the consolidation, and other patterns. It goes through the fundamentals that I like to identify in a stock. Then we go into depth, just like we did in identifying the patterns on a chart, so we can see where the big institutions are buying and selling. That gives us a big edge. We talk about risk management, why it's so important to a healthy portfolio, and more. We put this into a course format like you got in school, with quizzes and exams, so that you know you're learning the information. Once you complete this course, you'll walk away with the ability and the confidence to apply a new system to your trading. You'll be able to translate what you learned into profits, cutting losses, and managing your portfolio just like a professional would. It's called Trade Like a Pro. Now, this is a course that we offered in 2018 for $1,297. But now we've developed some new courses. We have updated this one, and we're offering it to the first 500 people who sign up for just $47. It's such a huge discount to actually see how I trade my system, but I really want to help people make their way in the markets. Hey, listen, it's totally up to you. I'm confident in my system and what it can do for your trading. In fact, I'm so confident that if you try it, trade it, and don't have good results, I'll give you a full refund within 30 days. So there's no risk. But hey, listen, even if you don't take advantage of my offer, I still hope that you've subscribed to our site, because I want to send you stock picks, stock analysis, market opinions, and other stuff every once in a while. So be sure to subscribe using the link on this page. I hope you take me up on my offer and take the next step toward your stock trading success. And I hope that I get to meet you at one of our trading seminars or weekend retreats. Thanks for watching.